Hedge funds. You hear that term and you probably think of high finance, big risks, maybe even bigger returns. But what you might not think about is the incredible amount of legal work that has to happen before even $1 gets invested. Today, we're going to break down the actual blueprint for legally launching a hedge fund right here in the US.
So you've got this killer investment idea. How do you turn that into a real, live, fully regulated hedge fund? Well, that's what we're here to do. Let's walk through the entire legal path step by step.
You know, it turns out having a great trading strategy, that's just the tip of the iceberg. That's the starting line. The real journey is this winding path through a maze of corporate law and financial regulations. So let's find our way in.
All right, before we jump into the how, we've got to understand the what. So first things first, what is a hedge fund, really? And you might be surprised to find out where that name actually came from.
Okay, so at its heart, a hedge fund is just a private investment company. But here are the magic words you need to remember. Exemptions from registration requirements. That's the key. It's what separates them from something like a mutual fund and gives them a ton of flexibility. And here's a fun fact. Ironically, a lot of hedge funds today, they don't really hedge their bets at all. The name is kind of just a fossil from the past.
Okay, now we've got the definition down, so let's get our hands dirty and start laying the legal foundation. This is the part where we go from a cool idea to a real-life company. Or, more accurately, companies, plural.
And this is one of the first, most critical things to understand. You're not just creating one company, you're creating two. First, you have the fund itself. Think of it as the treasure chest. It's usually set up as a limited partnership or an LLC, and it's where all the investor money goes. Then you have the manager. This is a totally separate company, and it's the brain of the operation. It's the investment advisor making all the calls. Why two? Well, it's all about protecting yourself from liability and having a clean way to manage those all-important fees.
So you've got your two-entity structure planned out. What's next? Here's your basic checklist. You've got to pick a name for your fund, of course. Then you need to get an employer ID number from the IRS. That's a must. And finally, you file your articles of incorporation. And you'll see this a lot. Many funds decide to do this in Delaware. Why? Simple. Their laws are just incredibly friendly to businesses.
Okay, the company officially exists. Now you have to write its rulebook. And I'm talking about the core governing documents. This is the whole shebang. Your mission statement, your code of ethics, and, this is a big one, the super detailed compliance manuals that lay out the rules for literally everything you're about to do.
All right, so your companies are officially on the books. They exist on paper. But you can't do anything yet. Now you need the license to operate. And that means we're diving into what it takes to become a registered investment advisor.
So what exactly is a registered investment advisor, or IRA? Well, it's any firm that manages investments. But the key part, the really crucial part, is that they have a legal fiduciary duty. And that's a big deal. It means you are legally bound, by law, to always act in your client's best interests. It's not just a nice idea, it's a legal requirement.
So how do you get started on this? The process begins online. That manager company we talked about, it has to register as an advisor, and it does that through the official government portal, which is called the Investment Advisor Registration Depository, or IARD for short.
Now, it's not enough for just the company to be registered. The actual people on your team, the ones making the investment decisions, they have to get licensed too. And how do they do that? They have to pass the Series 65 exam. This is a big test run by FINRA, the main financial industry regulator. It covers everything, securities laws, ethics, you name it. It's all about proving you have what it takes to handle other people's money responsibly.
Okay, let's take a breath. The initial setup is done. But here's the thing. As your fund gets more successful and starts managing more money, the rules of the game change. They get tougher. So now we need to talk about navigating the different layers of SEC regulations.
And what triggers all these new rules? It all comes down to one key metric: assets under management. You'll hear this called AUM all the time. It's just a fancy way of saying the total dollar value of all the investments you're managing for your clients. And the rule is simple. The higher your AUM, the more the regulators are going to be looking over your shoulder.
I like to think of it as a regulatory ladder. When you're small, say under 25 million in assets, you're mostly just dealing with state-level rules. But then you start climbing. Once you hit that $100 million mark, bam! SEC registration becomes mandatory. You have to file a big document called Form ADV. And if you keep growing past 150 million, you have to file an even more detailed one called Form PF. It all makes sense, right? The bigger the fund, the more people are involved, and the more transparency the government wants to see.
And when you look at that ladder, this one quote really stands out. Hiring good legal counsel is an investment. Seriously, trying to figure out all these forms and thresholds by yourself, it's just not a good idea. It's a massive risk. A good lawyer doesn't just check the boxes to keep you out of trouble. They send a signal to the whole industry that you're a serious player and you're here to stay.
So, let's recap. You've built the legal structure, you're registered, you're ready to go. Now for the million-dollar question. How do you get investors? Let's get into our final section, which is all about marketing and what is often called the real challenge.
You know, for the longest time, hedge funds basically couldn't advertise. The rules were super strict. But that all changed back in 2012 with something called the Jobs Act. This was a huge piece of legislation that really modernized the rules and gave fund managers way more flexibility to actually get the word out.
But there is a catch. There's a golden rule you absolutely cannot break. You can market your fund pretty broadly now, that's true, but the people who are allowed to actually put money in, they have to be what's called accredited investors. And that's a legal definition. It means people who meet certain high income or high net worth requirements.
And you know, this kind of brings us to the big picture here. We've walked through all these incredibly important steps, setting up the companies, getting registered, making sure you're compliant, and as complicated as all that is, it's really just the beginning, it's just setting the stage.
Because once that legal blueprint is finally done, you're facing the one question that truly matters. The question that defines whether a hedge fund makes it or breaks it. After all that paper pushing, after all that legal setup, can you actually outperform the market? Can your strategy deliver? That is the real test.